Well, the Nifty is holding well in the green. So let's focus on a couple of stocks. Mahindra & Mahindra, one of the top gainers on the Nifty after it sold 30% stake in its renewable energy arm. Brokerage house CLSA has also given a bullish call on the stock. Sonia joins us to fill us in with more on that. Sonia.
Well, you know, way back in 2020, Mahindra & Mahindra had come out with a strategy where they were looking to sell or rather monetize a lot of their subsidiaries, eventually list them to unlock value for shareholders. That plan continues, and as you rightly pointed out, M&M has sold 30% stake in their renewable energy arm for a little over 2,300 crores. Now, what they will do is set up an InvIT to list the renewable energy assets, and that will help unlock value for shareholders. The Mahindra Group will deploy these funds into the business and the InvITs over the next 7 years. They currently have an operational capacity of 1.54 gigawatts, and they're looking to build a strong renewable energy business. And this has been taken very well by shareholders. CLSA, in fact, put out a note, not on the stake sale of the renewable energy business, but overall on the business, where they say they maintain a buy. They have a target price of 1567, which is well above the current market price. The title of that note is M&M is going through a golden period because of the terrific response that M&M has seen to the slew of new SUVs. They also expect a full positive impact on the margins Q3 onwards because raw material prices have fallen quite a bit, and very strong bookings of over 240,000 units on their SUVs currently. Not just that, they have a slew of new SUVs coming on board, whether it's the new XUV 300, the Bolero Refresh, the 5-door Thar, and over the next 12 months, it's going to be, advantage M&M in that sense, since they're looking to win the market share game. Hence, these two reasons are, perhaps the reason why M&M is up 2.5% in trade today.
All right, Sonia, take that point. That's about M&M up 2.5%. But the other stock which is doing well today is ONGC as well, up about 1% or so. And this is as the government in its fortnightly review has cut the windfall gains tax. In fact, on crude, it has been reduced from 13,300 rupees per ton to about 10,500 rupees per ton. For ATF as well, the export duty has been revised to 5 rupees per litre as against 9 rupees per litre. And we have diesel export duty, which has been revised to about 10 rupees per litre versus 13.5 rupees per litre itself. But the bigger trigger for ONGC perhaps would be something that our colleague Timsy said, that, they've gone ahead and requested the government to use the dividend route rather than imposing a windfall gains tax on ONGC and the oil companies itself, because the tax affects profit and committed capital expenditure for future projects. So that is something that, if is taken into consideration by the government, as sources have told Timsy, we will see a bigger benefit come by on ONGC, because remember, the stock had seen a massive fall ever since the windfall gains tax itself was announced. The other factor that is supporting the stock is that crude hasn't fallen much. It's still holding around that $92 per barrel mark. The other stock in on our radar is Cipla. It's after its Goa plant has received 6 observations following a U.S. regulator inspection. Ekta joins in with more on Cipla. Ekta.
Thanks for that. Well, the news on Cipla today is that we managed to access the Form 483, which is basically the 6 observations which were issued to Cipla's Goa facility. Now, just to give you a background, it was inspected from the 16th to the 26th of August. At that point in time, it was issued 6 observations by the U.S. FDA. Remember, this particular plant already has been under the U.S. FDA scanner because they have a warning letter which was issued to them in Feb 2020. Now, in terms of the details of these 6 observations, that's basically the new piece of news for Cipla today, is it has indicated, the Form 483 has indicated around 3 repeat observations. Remember, those 3 repeat observations are from the past inspections, and the concern is that it is going to definitely be more difficult for them to solve, considering that they have a warning letter on this particular facility. The repeat observation means that the US FDA is not satisfied with the remediation from the last inspection, and those problems still sustain and have sustained into this inspection as well. Now, in terms of the impact, it is definitely negative. One of the major disclosed products that could get impacted is a cancer drug, Abraxane, from this particular plant. It was expected to be launched in late FY23. Estimates have built in $20 to $30 million from this particular drug, contributing to around 2 to 4% of core EPS in FY24. Nomura wrote on Cipla today, they have a buy, target price 1195. As a base case, they believe they do not expect the inspection outcome to have a material impact on earnings.
Thanks a lot for that, Ekta. Well, on that note, though, we've run out of time on this edition of Chartbusters. You stay with us. Trading Hour comes up next.